Thanks for joining us at XM.com for this Forex Preview video. We'll be having a look at the Federal Reserve meeting coming up this week and the outlook for the dollar. I'm Christina Marujos. With me today is Senior Investment Analyst Marios Hadjikyriacos. Marios, the much-anticipated May Fed meeting is coming up on Wednesday. It's difficult, of course, to envision any surprises at this meeting as a 50 basis point rate hike is fully priced in already. But apart from the rate hike, could policymakers signal anything on the reduction of the balance sheet as well?
Hello, Christina. They most probably will. So far, what we've gotten on the balance sheet were some sort of vague guidelines on how quickly it's going to be reduced. The market this time is going to be looking at some specifics, how quickly it's going to happen, what are the maximum, what is the pace and what is the magnitude of balance sheet reduction. But here's the juice, here's what I think is really going to drive this meeting. The markets have already priced in a lot from the Fed. So much, in fact, that I think it's going to be really difficult for the Fed to outgun the markets, to be even more hawkish than what the markets expect. So why do I say all of this? The markets have already fully priced in a 0.5 percentage point rate increase at this meeting and at the next 3 meetings after that. So a total of 2% interest rates by September. Now, that is quite a lot. That is quite dramatic. It's difficult, in my view, for the Fed to signal anything more than that. Because if they do, well, first of all, the markets might start panicking. You might see mortgage rates moving even higher, or the stock market might collapse. That's not really what they want. They want the adjustment to be orderly, and it has been more or less so far. I think they want to keep it that way. So, look, the markets have already done a lot. They've priced in quite a lot, and I don't think Powell wants to go further than what has been priced in. In fact, I think he's going to be a little cautious about, the first quarter GDP print was negative. The rest of the world doesn't seem so great. Europe and China are slowing down. And overall, I think they're going to be really apprehensive of the risks right here. That yes, we want to bring inflation down. We will be quite aggressive, but we don't want to overdo it because the outlook for growth doesn't look so spectacular anymore.
Apart from the Federal Reserve meeting, this week also holds Nonfarm Payrolls for April. They're out on Friday. Therefore, how could the dollar move this week?
Difficult question. So a lot of moving parts for the dollar. Well, look, from the Fed, I think Powell is going to be a touch softer, a touch more balanced, let's say, than what the market expects. Right now, the market expects the Fed to be super hawkish. I think they'll be somewhere in the middle. Maybe that's an argument for the dollar to take a step back, but the overall trend is positive, right? And we've gotten to this point. The dollar has been the king of the forex market for a while now, and it has been really a perfect storm of rising U.S. interest rates, safe haven demand in the markets with the fear and so on in the stock market, for example, and equally crucially, the storm clouds that have gathered over the European and the Chinese economies. If the two other biggest regions, economically speaking, in the world are not doing so well, that is a natural sort of benefit to the dollar. So until these factors change, it's difficult to argue against the dollar. Yes, we might see a step back, or we might see some counter trend moves, but I think the overall trend for the dollar remains positive until the outlook for the rest of the world starts to improve. Either that needs to happen, or the Fed has to signal that they will under-deliver, that they'll deliver less than what the market has priced in. Could that happen? Yes, it definitely could, but we are a long way from that. We need to see inflation cooling down first. That's probably a story for the second half of the year. Now, finally, in terms of the employment report, it's expected to be yet another strong US jobs report. So the narrative remains the US economy is strong. Every other region is not particularly strong. Until this dynamic changes, the outlook for the dollar remains positive.
Marios, thank you for joining me today. And thank you for watching this Forex Preview here at XM.com.